Hi, I'm Randy Kobat, Senior Vice President at Cox Automotive, and welcome to our live market view for the second quarter of 2019. I have the opportunity to talk to many of our clients on a regular basis, and if there's one topic that all of them talk about, it's the opportunity in used cars. Specifically, sales are up, gross profit is starting to improve, and the future does look pretty strong. But here's the challenge. Even as you're selling more used cars and making a little bit more gross profit, your net profit per used vehicle retailed continues to go down. According to NADA through March, while retail gross profits increased by $20 a unit to $2,355 both front and back, retail net profit dropped $21 to only $61 a car. These net profit figures mirror a trend that's been happening for some time, and they beg a key question. As you look to sell more used cars, what are you doing to make more money? Some dealers I talk to have tried to answer this question by managing their expenses more tightly. But others are really trying to change the playbook and are applying investment value principles to inventory management. So what does that mean? Well, really the short answer is that investment value management is about knowing the difference between a poor performing car and the good ones. And by knowing, I mean what the market data tells you about the car, not what you think to be true. Here's an example that all of you have experienced probably almost every day. You may have a car that on the surface doesn't seem like anything special, and your gut would tell you to get rid of it, ending up not making any money in the process. But when you have a deeper understanding of the vehicle's investment value, that same car may actually be a winner, regardless of what the calendar says. A car you can and should hold on to get more gross profit. On the flip side, you can see the cars that offer little investment value, using this insight to be more cautious as you either buy these cars or take them in on trade. And if you own them, you can be more aggressive in your pricing or marketing to get a faster retail sale and minimize the risk associated with a car like that. Here's how one vAuto dealer uses investment value management to increase both volume and gross profit. Jim Mason at Stephen Toyota in Harrisonburg, Virginia, noticed the other dealers in his market were getting a lot more competitive. He was selling plenty of cars, but his gross profits were getting smaller. By applying investment value management, Jim found opportunity. He priced his lower investment value vehicles more aggressively so he could retail them before they lost all their gross profit potential. Meanwhile, he priced his higher investment value vehicles less aggressively, giving them more time to breathe and earn the gross profit that they deserved. I can tell you that Jim's pretty happy with his new inventory management playbook. He saw a 32% increase in volume and a 76% increase in front-end gross. And I know this really sounds too good to be true, but that's the real impact a more investment value informed approach can make in your business today. So as you look to capitalize on a stronger used vehicle market, I'd encourage you to consider that staying the course and cutting expenses or simply trying to sell more used cars is not necessarily going to drive the net profitability and success that you need from your used car department. Instead, change the course. Think differently about how you look at your used car inventory and how you can more efficiently and successfully manage each unit's investment value. So if you'd like to hear more about Jim Mason's success story, you can see it on our website at vauto.com. As always, thanks for joining us for another installment of Live Market View, and we'll see you next quarter.